All right, hey guys, good afternoon. It is Monday, October 17th. Our group mentoring session is scheduled for 2 p.m. It's 2 p.m. right now. So I'm gonna go ahead and finish setting up this room and then we could get started shortly. So just give me a few moments to finish setting this up. And then we can get started with our topics today. Main topics for today are going to be the high-low quick scalp, which is obviously everyone's favorite right now. And then we'll be reviewing the V1 variation, V1 continuation, and SR scalp. So just give me a moment real quick to finish setting this up and we should be good to go. All right, that's good. Let me get this link sent out to you guys here in the premium. So here. All right. That's good. Give it a few moments for people to make their way in. Let's go right here. One cover. Quick scalp. Two. You. Should be one. Plus information. 3. SR rejection. All right, so I'll give it a few moments for people to make their way in. Good afternoon, everybody. It is 2:03 right now. It is Monday, October 17th. So our scheduled session was to start at 2 p.m. We're about 3 minutes over. So I'll give it a few more minutes for people to make their way in. If you guys have any questions or you want me to cover anything specific, feel free to put your questions in the chat. But for the main topics for today, we're going to be covering the high-low quick scalp strategy, review the variation V1 and V1 continuation, also review the SR rejection scalp. So basically the 3 main strategies that we apply during our live sessions, that's going to be our main focus. Main reason for these 3 is because they work under pretty much all market conditions. Some work better than others, but we have a strategy to apply, whichever the market decides to move. So if the market is moving directional, we can apply the variation, continuation, and high-low quick scalp. When the market's moving sideways, we can use the SR rejection scalp, but we can use the SR rejection scalp in all markets. So this will probably be the staple for us. Of course, it doesn't come up very often. When it does come up, it typically does hit pretty smoothly. These 2 over here as well. So if there's any other questions, you guys can feel free to put your questions in the chat. We have one question here that we'll be covering first. So it's from Brian. I think Brian is here already. So we'll start off with this. And I'll type it up as well, Brian, if you're not in here. So question from Brian is question for the mentoring session, quick high-low scalp. I'm pretty sure I know the answer, but others may be thinking the same. For example, for a buy, we are looking for the low after the momentum bar is already green. And here's a question. Does it matter what color the low candle is? Can it be red or green? Thanks, Sean. See you at 2 p.m. Yeah. So quick answer to your question, Brian, is that it doesn't matter. So you're just looking for any low if you're looking for a buy, and then vice versa. If you're looking for a sell, you're looking for any high. So Brian's question here was whether the color matters. It doesn't. So you're like, for example, here we have a high with a green candle. You can see how price kind of pushes up and then has a wick. Or actually, sorry, this is a bad example. For example, right here, we have a green momentum and then the low here is a red candle. Doesn't matter whether it's red or blue. I mean, sorry, red or green. You have a red one right here, and then you'd enter right here for the buy, and this would have been a full TP, obviously. Same with, let me see if I can find an example where it's green. Okay, so like, for example, right here, Brian. So right here, we have a buy signal. The low here is green. You would enter right here, and same difference, right? So it doesn't matter if it's green or red. But thanks for bringing that up, because that's not one of the requirements. So I figured that'd probably be like, something that people obviously know, but I shouldn't assume. And I'm glad that you brought that up. So thanks for that question, Brian. And hopefully that makes sense. Other than that, let's see if there's anything else here. I think that's the only initial question. Other than that, we'll just cover the strategies here. So if there's any other questions, feel free to put your questions in the chat. Otherwise, we'll start off with covering the high-low quick scalp strategy. It's a super simple strategy, but you guys just have to be really quick. Like, you can't think about it, right? When you see the wick, you have to enter right away. It's also hard to test when it's not real time, because you can't see when the wick actually starts, right? So we're just going to have to assume that the wick would start at this point here. And I'm just going to go back to this candle here, because this is the first example that we can cover. So I will put the requirements over here for the high-low quick scalp. And for example, here, we're going to be looking for a buy. The reason that we're looking for a buy here is because the strategy is based off the momentum signals, right? Because the momentum is going to identify the direction of the trade. So for example, here, if we have a buy signal, we're looking for buys. If we have a sell signal, we're looking for sells. So at this specific moment, we have a buy signal. And in order to confirm the entry, we're going to be going down the requirements. So for right here, the first requirement for a buy is to identify a bullish direction of momentum using the momentum indicator. So with that said, we have a green buy signal right here, right? This is using the K2 momentum indicator. If you guys don't have the indicators and you want access to it, just go to the website, kodikaitrades.com, and then you can get access to it here. So basically, you'll need the momentum indicator. I'll take up a couple indicators here that we're not using. So we don't need this and we don't need this. I just want to avoid any confusion here so that you guys aren't looking at things that are not necessarily required. The trend meter down here is not required right now. I don't know if this is something I'm going to add to the requirements. I know Patrick mentioned this during the live today, that he only takes trades in the direction of trend. So we're not going to use it for now, but because we're still building the strategy, we want to try to apply the strategy with as little requirements as possible. Because if you have too many requirements, you're just not going to have a strategy, right? Because you're never going to have any entries. So what we'll do with this here is we'll start by identifying entries without the trend. I know the trend it'll be useful at some point, maybe for an extra confluence, but we're just going to figure out a bare bones strategy to applying this. So with that said, we're going to use these requirements here. So the first requirement, identify bullish direction. We have that here because we have a buy signal, which is most recent. There's no sell signal after it. For the second requirement, you want to identify the low using the high-low indicator. So I'll go back maybe one candle right here to just clear it up a bit. So first requirement met, we have identified a bullish direction. Second requirement, you want to identify a low using the K2 high-low indicator. So for example, right here, we have a high and then we have a low. We don't care about the high because we're looking for buys here. We care about the low. So we have a low right here. This is going to be requirement number 2. Requirement number 3 is you want to identify a wick rejection off the following candle. So it doesn't have to reject off anything. You're really just looking for a wick. So right here is the second requirement. The third requirement is that we identify a wick on the following candle. So I know this isn't real time, but you can see right here how the candle changes, right? It's kind of like slow motion. If I go back one candle again, just watch this candle. It initially opens red, but then it swings right back up. So here's the initial candle where we identify the low. I'm going to zoom in a little bit and just focus on this next candle right here, right? 1, 2, 3. You can see how it starts off red and then it swings up, right? So when it swings up and it gives off a wick right here, this is where you would enter your position at this point here. It has to be real time. So you'd be watching it as soon as the candle closes, and this is where you would make the entry. So this is where you would enter the trade. You would technically be in profit already as price is pushing up. And then as price pushes up further, you can see how price blasts right through your TP. So there goes an example for a buy. Let me go back and just see if we can find another example here. If there's any questions, guys, feel free to put your questions in the chat. I can clear up any confusion that you guys have or clarify anything that you guys need focus on. So there's no sells here. I'm going to go back to this momentum signal. The reason why there's no sells here is because there are no highs that have appeared after the momentum signal. And TradingView is kind of laggy today. Sorry, guys. So looking at this right here, we have a sell signal. There's no highs, right? There's a buy signal after it. So from that point, there's no sells available. Back to this over here. This basically, if you want to back test this, just go back to every momentum signal. So again, right here, we have a buy signal, right? So that's going to be before the sell signal. I can see the low right here. So I'm just going to go back and replay it to before that candle. I'm gonna have to refresh my trading view. It's kind of laggy. So I'll just go over this example right here. Once I'm done with this example, we will I'll just refresh my trading view. So again, right here, we're looking for a buy. The reason why we're looking for a buy is because we have a bullish momentum, right? With that said, we will be looking for the next low. So with this said right here, we have the buy signal. That's requirement number one. Requirement number two, you want to identify a low using the high-low indicator. So we don't care about the high here. We care about the low. Price established a high. Now we have a low at this point. Now in the following candle, you're going to be looking for a wick, right? So we have requirement number two met right here. Requirement number three is we're looking for a wick. Doesn't matter how big, how small it is. As soon as you see the wick, just hit the buy button and you'll be ready to take that entry. So right here, again, slow motion. You can see how price pushes down a little bit and then it pushes up. As soon as you see the wick right there, that's where you enter the buy. So the buy would be right here. TP stop loss. This is what we're typically using. I've been using 200 pips for my stop loss, but you know, as I mentioned during the live today, it gets really close because due to the spread, when I enter this trade, I'm like down here already. So this is where my entry is typically at. It's like way down here because the spread's so wide. So I get kind of worried because I'm worried that if I get any drawdown, price may trigger my stop loss because you have to cover the spread before you make any profit, right? So technically, as you push up to this point here, you're like barely in profit. Or like if you push up to here, because the spread's typically like it's around like 30 pips, right? So this is like where you would enter the trade below here, and then as soon as you make some profit, you know, this is where you would be making the entry. So basically, this is what the TP stop loss should be, but I've been using a 1020. I don't know yet if I'm going to switch back to this. I just like it having I like having a tight stop loss because typically you don't have any drawdown. But let's let this trade run. Same setup as the last one. Price pushes up slightly. It's in profit. At this point, you'd be at break even already. Price comes down a little bit, kind of just bounces around a bit. And then eventually it goes up and hits TP right there. So this is like one of the more iffy trades because typically you'll hit your profit target within, you know, a minute or two. The reason why this trade was a little bit iffy is if you look at the time that this trade came up was about at 120. So market was closing around this period right here. And that's why the volatility died down. So you typically wouldn't be taking trades around this period, but I'm just using this for example. Other than that, that's one more example for a buy. Let me just refresh my trading view to fix this lag. Hopefully it fixes it. All right, so I refreshed it right there. I'm going to go back to the next example here. So we just went over this example over here for a buy. I mean, if you guys wanted to see another example for a buy right here, there's one more that is right over here. So Natasha, you said that you want to, if you guys are trading during Asia session, don't change your stop loss to 200 pips. That's the mistake I made last night. So you guys saw my trades over here, right? I made one loss. That loss is because the stop loss is too tight. The spread during Asia session is too wide. If you look at the spread right now, it's 320 pips, or it's 320. It's technically 32 pips, but it's way too wide. So if you're trading during Asia session, which you probably should be trading anyways, you should not be using a 200 pip stop loss. It's way too tight. You know, you'll be like more than half into drawdown if you take that type of trade during Asia session. So from my experience and my advice, I would just say not to trade during Asia. You know, sometimes I just get the itch to trade during Asia because the spread is pretty low. So if you do take trades during Asia session, just make sure to look at the spread. If the spread's under like 260, 240, then fine, take the trade. If the spread is over that, then either don't take the trade or just don't take the trade. That's probably gonna be my advice, because that's where I started to notice when the spread is above 240 or 260, the volatility is super low. So you'll enter the trade super deep into drawdown, and then you'll be stuck in that position for like minutes, if not hours, until it actually moves. And then when it does move, you know, it's a 50-50 chance that it's going to hit your TP or not, unless you have a pretty wide stop loss. So for my advice, only trade Asia if the spread is super low, like below 240 on FTMO, or that's the equivalent to 24 pips. Otherwise, I would just recommend that you trade during Asia during the live and after. So not necessarily after 8 o'clock, but between 9 and 10 would be a good time, or 9 and 11. So just FYI, guys. So here's another example here, and that's good, Natasha. If you only trade New York, then you're fine. You can probably play around with it, but if it triggers your stop loss and you notice that it gets too tight, then, you know, probably just spread it out a little more. Like I think Maddie and like Patrick were mentioning during the live today that they use 250 pips. So you might want to just use 250 to be safe, just to have that cushion. And then once you're confident and you feel proper about your trades, then you can go down to 200. Because the thing is, if you miss a split second of an entry here, so let me show you an example here. This is an example for a buy again, right? We have bullish momentum. We have a low right here. You would enter right here, right? This is what happened to Dejan today, because his broker was just laggy. So what happened here was, so your entry would have been right here, right? If you enter like a split second late, like say you enter just a little too late and you enter up here, this could be a big issue, because if you enter at this point and you end up getting down here because of the spread, you'll be really close to hitting your stop loss if it goes into any drawdown at all. So like, for example, right here, see how this spiked down right here? If you entered at that point, you would have hit your stop loss because your stop loss is too tight. You guys get what I'm saying? So this is why, unless you're like getting in at the proper time, don't use a tight stop loss. If you're like not as fast as me or as other people in the group, because the thing with me, guys, is that when I'm looking for this entry, my finger is literally on the sell button or the buy button. So I have my mouse, you can see my mouse right here. It's on my FTMO and it's literally on the buy button. So as soon as I see a wick, I enter the trade. So I'm like in that trade already. If you enter too late, you're going to get screwed because you're going to get caught in this drawdown right here. So unless you're fast, then don't use a tight stop loss. Use the same 300 pips. If you're fast, then go ahead and use the 200. But if you're not, you know, that split second could be the difference between your stop loss getting triggered or you being still in the trade. So, I mean, this might be an over exaggeration. So I'm just doing this to warn you guys, because I don't want you guys to get caught in these trades when they pull back a little bit. So this is definitely an over exaggeration. Your entry is probably going to be somewhere like around here. So slightly below it, maybe like a little higher. It's not going to be halfway. The reason it was halfway for me is because the spread was super wide this morning. It was like 290 and I was still entering trades, which I should have waited for it to go back to like 190. So just keep that in mind if you guys do decide to take these trades. But here's the example right here for the buy. It's still technically running. Your entry would actually be down here. And you can see that it's still running. Kind of bounces around a bit, but eventually it does hit your TP right there. So there goes the example for another buy. Here we have another example for a sell. Let's go over here real quick. So I haven't gone over any examples for a sell, but here is one right here. All right, so typically for this right here, I actually wouldn't take this trade because the wick on top is so high. Or actually, no, I probably would take this. If the body is big, then I wouldn't take it. But if the wick is big, then I would probably take it. That is the difference between these types of candles here. The reason why I would take it if the wick is really big like this is because this is pretty much hinting that price is likely to push down further, right? And if it pushes down at least 100 pips, then it's going to hit your TP super quickly. If there was a body candle here, then I probably wouldn't take it because it's going to show that there's strength in the candle. It's like basic price action, like something like this right here. If I saw a entry and the candle was like something like this, I would not take it for a buy, right? Because it's just too big, or for a sell for that matter. So here's an example for a sell right here. One that I would maybe take, but I would consider risky. Just the period of time right here, I still wouldn't take a trade either way because this is at 12.50 and this is getting close to market close. Typically after 12, I don't trade at all anymore. If I trade after the live session, I typically trade from 6:30 to 8 and I'll take a break for about an hour, come back around 9 or 10, and then I'll trade from there until 11 sometimes. Not all the time, but if I do feel like trading more, that's the time that I'd be trading. Right here is already dead zone. Around 12 o'clock right here is where I stop trading. So 12 o'clock right here is my cutoff. The reason for that is because you start to get some weird movement. You typically get the mid-market reversal, and then sometimes you get just a dead period because a lot of people are pulled out of the market already as they anticipate market close. So with that said, we have the setup right here for a sell, right? I'm going to go over the requirements again right here. The reason why we're looking for a sell is because the most recent momentum signal here is a sell signal. So right here, we got a sell signal. Since we have that, we're only looking for sells. So first requirement, identify bearish direction of momentum using momentum indicator. We have the momentum right here for a sell. So we're only looking for sells. Second, you want to identify a high. Previously, we were identifying lows because we were buying, but since we're selling now, we don't care about the lows, we care about the highs. So we have a low right here, it's irrelevant, but we have the high right here, which is relevant. So with that said, we have requirements 1 and 2 met. Third requirement, you want to identify a top wick rejection. So for the buys, we're looking for a bottom wick rejection. For the sells, we're looking for a top wick rejection. So moving forward to this next candle over here, you guys can see that the wick started around here, right? So this is where your entry would be right there if you were following it. Profit target is 1020, 1030, whatever you want to set it to. I know I have it set to 300 here. This is probably going to be the better case if you don't want to be too risky. And then if you let the trade run at this point, I mean, technically you would have hit your TP already. So you can see if you entered immediately. So price pushed up, came back down. If you were in this position right here, it would have blasted straight to your TP. So within a minute, it would have hit your profit target. If you enter this trade late, which you shouldn't, if it hits TP already, don't enter the trade late. But for example, here, if you were to enter at some point and say, for example, the trade did not hit yet, right? If it kept pushing, eventually it would hit your TP, right? But I never recommend entering the trade late. If it hits a TP already, don't think about entering it late. If it hasn't hit the TP yet, then you go ahead and enter the trade. But in a situation where it hits a TP, don't make any late entries because this trade will come up again later. You guys saw after this trade, I showed you about 3 other examples, right? So if you miss one trade, it's fine. This trade comes up so often where you don't have to FOMO into the trade. Just let it pass and then move on to the next one. So here is an example of a sell. If there's any questions, feel free to let me know. Otherwise, I will keep going through some more examples here. There's a lot of entries here that we passed through, and there's some more to come. So here we are with buys now. So there's actually 2 entries right here. So we have one buy signal right here. And then we have one low right here, which is the first entry. And then we have another low here, which is the second entry. There's 2 entries there within one momentum signal. I'm going to go back and I'm going to show you this first one first. So I'm just going to go to this one first right here. Let's replay to this candle. And you guys can see how easy the strategy is. It's not difficult at all. It's really just being focused and being able to make that decision when the trade comes. I feel like the only way people will really screw this up is if you're not there, right? If your head's not there and you're not ready to take a position, you think about it too much, you're going to miss the move. So what I would recommend is if this is too, what can I say? I'm trying to think of the word. If it's too risky for you and you don't feel comfortable taking this position, try it out with a demo account, right? Take a couple demo trades and just let the trade run. Understand how to use the DOM or the FTMO quick trade manager, because that's what I use. And let the trade run. Don't pull out early unless like it hits your TP and it doesn't pull out due to the spread. You know, in that situation, pull out early. You guys saw my profits from today. So here's my main account. You can see from today, I took this first trade right here and I pulled out early. It was in profit, but due to the spread, it kept pushing me out. So I just pulled out in profit, although it did hit full TP again later. So I should have just let it run. But, you know, with us testing the strategy, I'm better off just pulling out. This one right here, I let full TP. And then this one right here, I had to pull early as well because I had the same issue with the spread. You know, with the type of market that we're in right now, you're going to get a variable spread. It's not going to be set at 190 all throughout the day. Like for example, today it was it was kind of weird because it went from 190 to 290. I've never seen it jump that high within a few seconds. The reason for that is because there's a lot of news going on today. So if you guys remembered from this morning, I mentioned that a lot of earnings are going to be released today. A lot of inflation news. Let me just check the calendar real quick and I'll show you guys real quick if there's anything to look out for tomorrow. So tomorrow, pre-market, we have some light impact news. We have NAHB housing market index, and I think that's about it. But we also do have earnings tomorrow as well. So just something to keep an eye out for. And that's the only time you guys should be pulling early. But anyways, back to the examples over here. Let me see. Barack said, so we can take multiple entries as long as momentum is in line with the direction. Yeah. I mean, if the entry comes up and the requirements are met, Barack, you can take as many entries as you like. I mean, sometimes these trends will go on for a long time. If you have a bullish momentum, this can go on for like hours, right? It doesn't necessarily have to shift right away. So if you have an entry and the requirements are met, then yes, you can take as many entries as you like. These aren't multiple entries at the same time, though. This one already hits TP and this one hits TP after. So I'm not sure if there's a confusion there with regard to like which strategy or which trade is running. But typically your first one's going to hit before the next one. So you're not having multiple trades running at a time, if that makes sense. I don't know if that's what you're referring to, having multiple trades, because you can have multiple trades, but odds are you're not going to have that because you can see here, this one actually pushed up right away, hit TP, and then it came back for a while, retraced, and then provided a second entry right here. So yeah, I mean, if you have the requirements met, you can go ahead and take the trade. But typically, you're not going to have multiple trades running at the same time, not for this specific strategy, because the momentum swings usually take some time to reset. So for example, there's one right here, momentum up, reset, momentum back up right here. So going back to the requirements, first requirement, identify a bullish direction. We have a buy signal right here, so that's bullish direction. Second, you want to identify a low using the high-low indicator. So price goes up, price goes down. Here is a low. There goes the second requirement. Third requirement, you want to identify a bottom wick. So again, right here, I'm going to slowly push next and just focus on the next candle, right? So you can see from this next candle right here, price comes down a bit, but then it swings right back up. So your entry would have been, I mean, your entry could have been anywhere over here because if price pushed down this low, you could have really made the entry at any point. Like your entry could have happened. Either you entered like at some point when price was coming down here, or you could have entered, you know, right at this top right here. It doesn't matter where you entered, but eventually your entry would have came at this point. The body of the candle doesn't really matter too much. It's, you know, it's mainly just identifying where the wick was. So I'll go back one more candle here again. I'll show you. Trading is really laggy today. All right, so let me just go forward one candle again. You guys can see that this was a red candle for a bit, but as soon as it swung up, you could have made the entry right here. If you made the entry at any of these points here, you probably would have hit your profit target before the candle moved on to the next one. However, if you enter this trade late right here, which I don't recommend, if we let it run, you can see the next candle also hits. So, I mean, it doesn't really matter. You would have entered anytime early down here. You would have hit your profit target. If you would have entered right here at the close of the candle, which I don't recommend, you still would have hit your TP. So there's one example right there. And then there's another one right before. So that's one example right there. And there's one more right over here that was right before it. So again, right here, we have a buy signal. We have a low at this point. Second requirement, third requirement, identify the wick. So looking at this candle again right here, you can see that there's a lot of points of entry where you could have made entry. Whether you entered, I mean, for this candle right here, you automatically would have won the trade. Doesn't matter where you made the entry. If you made the entry down here, you can see it already hit your TP. So if you entered right here, as soon as price swung back up, you still would have hit your TP because price would have been at that point. I would never recommend entering up here. At this point, you're like way too late. You would have missed the entire move. As soon as you see the wick, you got to enter right away. So right there, you see the wick, enter the trade, hit TP, and then either way, if you let the trade run at some point in the middle here, you still would have hit your TP. So pretty simple strategy. It's not that difficult. I mean, I feel like the only real issue with this strategy would be entry. So if you're too slow and you can't click on that buy or sell button right away, then this is probably not the strategy for you. But if you guys can like practice it and figure out, you know, the logistics of it, because that's the real problem here. Like the problem with me missing these trades is that I'm answering questions and I'm not looking at the chart. But now that we're applying this more often, I'm more dialed into the chart. So I'm really waiting. Like whenever I see a low there, I'm already staring at the chart and I have this set up there already. So that when I do see an entry, I'm ready to just enter it right away, because this volatility here is going to push to your profit target, within a matter of seconds. So let's see, question from Maria. Yeah, exactly. Jonathan said, don't trade on your phone with this one. LOL. Yeah, definitely don't take this type of strategy on your phone. You have to be on your computer, because you have to have the depth of market tool or the FTMO quick trade manager, because you have to have that TP set already. You can't be like entering the trade and then trying to set your TP, because you're not going to have time. By the time you enter the trade, it's probably going to hit your TP already within a few seconds. Question from, gotcha. Okay, yes. So Natasha said, the only time I lost a trade with this strategy is when I entered the trade too late or traded on my phone. Yeah, no, and I agree with you, Natasha. It's way too difficult to get out of the trade if you're entering on your phone, or if you enter too late, it's also too difficult because price is going to be due for, some sort of retracement at that point. Scrolling back up to Maria's question. So Maria's asking, how many candles should I wait to know that? You don't wait at all, Maria. If you have the entry, then that's where the entry would be. You don't wait for any candles because you don't have time. If you have a low there, the next candle is going to be your entry point, right? So you can't wait for any candles. It's going to be immediately right after. Maria said, because sometimes it's scoring new lows or highs and I can take the wrong one. It happened to me today. So which entry did you take, Maria? If you have the timestamp, I can look it up. Do you have a specific time for it so we can look at it and I can kind of see what went wrong there? I'm assuming you took this trade between like 8 and 9 or 8 and 10, which is usually a time where we don't trade. But if you do have the actual time, just let me know so I can pull it up here. And then we can see, what could have been done differently, because you can't really wait for it. I know you want to wait for the candle to establish the high low, but you can't wait for it because it happens right after. So if you have the timestamp, Maria, let me know, and then we'll pull it up right here. I'm assuming it's after 8 because we didn't have any losses during the live. So it must have happened after the live session, which is typically where I tell people not to trade. I tell people not to trade between 8 and 9. It's dead period right there. However, if you look here, there's a lot of entries that did come up. So for example, let's go back to like this point over here. So I'll go back to 8 o'clock and we will see where, and I don't know what's up with trading, it's so laggy. Okay, so for example, right here after 8, I mean, there's a couple entries here that came up and they still won. So there's one right here. I mean, basically to back test this, you just look back at all the highs, right? It's like 3 highs right there. Not a time where I would trade, but you can see that they still do hit. So for example, right here, we have this high, you'd enter as soon as this candle showed a wick, which should be right there, full TP. Again, right here, we have a high, you enter as soon as this candle showed a wick right there, full TP. And another one right here, looks like. This one looks like it might have been, or I don't know. Actually, there's no wick on top, so I don't know if this would be an entry. One thing that Maddie also mentioned too was like when you have a pending signal, like for example here, this was a pending signal. Let me go back over here real quick and see if there's anything else that was pending. Whenever you get a pending signal like that on the next candle, or if you have it on the actual candle where the high low is, typically, I mean, what Maddie's been doing is he's just been skipping it. Let me go back to this candle right here. All right. All right, Maria. So Maria said her entry was at 756. I'll go back and take a look at that. Real quick. mean, it's hard. You can't really tell here if you have a pending signal. This is why it's kind of difficult to back test it on past conditions, because you can't really tell if this was like a pending signal or not, because it only shows when it actually closes. So let's go back to 756 where Maria identified the entry here. 756. All right, so Maria said that she saw a so Maria, I'm right here at 756. I don't see any highs here. Did you take it for a buy or for a sell? I'm assuming you probably took it for a buy, right? Which would be the wrong way to trade, because you have a sell momentum right here. So I'm looking at 756. I don't see any highs here that came up. Oh, okay, I see. Yeah, so Maria said it was a buy. She just saw her mistake. Yeah, no, it's fine, Maria. You're still learning the strategy. I know it's an easy thing to screw up because you're looking for these lows, right? The main thing that you want to focus on here, and everyone's going to run into these same issues. The main thing that you want to always look at is the momentum signal, right? So if you have a sell signal right here, you're only looking for sells. I know it's kind of difficult because I could tell that you were probably looking for a buy here. That's kind of what I figured. So you had a low right here, but momentum was for a sell. So you'd only be looking for sells at this point. So unfortunately, yeah, you did take the wrong trade. Just try to put two and two together. So the two that you want to focus on is look at momentum, and then just pair that with highs, right? So you have a red signal, only look for highs. If you have a buy signal, only look for lows. So green, low, red, high, right? And yeah, unfortunately, yeah, you did take the trade in the wrong direction. I can see you probably took this one right here, or maybe even this one, but the next candle came lower from that point, and that's probably what stopped you out. So yeah, exactly. Brock said no momentum on bulls too. Yeah, no, definitely, guys. So yeah, it's all good, Maria. You'll bounce back from it. This is a brand new strategy, so we're all still kind of learning it. As you continue to apply it more and more, it's going to be more second nature. Like, you don't really have to think about it. That's why for me during the live sessions, whenever I see a momentum signal, I'm literally just looking for the highs. So once I have let me see the requirements. Yeah, so once I already identify, so that's why I go off these requirements here. Once I identify where momentum is going, from there I just skip that. I don't even look at it anymore. I look at 2, 3, and 4, or just 2 and 3. It's a very simple strategy. So whenever I have momentum, so for example, here I have a sell momentum, only looking for highs and then looking for the sells. Vice versa, if I have a bullish momentum here, then I'm only looking for lows. So if there's any other questions regarding the strategy, guys, feel free to put your questions in the chat. Otherwise, I can keep going over more examples. But if that's not the case and you guys are okay with it, then we'll move on to review of the V1 continuation, and the SR rejection strategy. Let's see, Natasha said the candles with pending signals got me caught. So I'm just going to do what Maddie does and skip it. Yeah, exactly, Natasha. You should probably just do that, because when you have a pending momentum like that, typically price is attempting to continue to push in that direction, right? Which is something that you want to be careful about, because the last thing you want to do is enter a trade, and then, worst comes to worst, it ends up getting caught. So Rashida's asking, so looking for highs for sell and lows for buy. Exactly, Rashida. So the reason for that, and let me show you the logic behind that. So the reason why you're looking for highs is because that high is going to confirm the retracement, right? So let me go over here real quick and show you. Let's see. Okay. So I'll show you guys the logic. This will probably help it make a lot more sense. So the reason why we're looking for highs here, and whenever TradingView decides to load up, okay. So the reason why we're looking for highs when we have a sell momentum is because when you have sell momentum, you're basically waiting for that retracement, right? You're looking for the retracement, and you're looking for that split second to enter the continuation. So when you have a sell momentum, price is pushing down, you're waiting for it to retrace up. So you wait for this retracement, and that's why you're looking for the high there, because when you have a high, this is going to identify as the top, right? So price comes down, price retraces, this is the top. Once you identify the top, you already have an idea that price is going to continue dropping, right? So that's why you're looking for the tops or the highs for sells, and then vice versa. When you're looking for buys, you're looking for the opposite. So you're doing the same thing here, but you're looking for the opposite direction. If I can find on here. Yeah, so again, right here, that was an example for a sell, and here's an example for a buy. So we have a bullish momentum here. You can see price pushes up, price retraces slightly, establishes a low right here. And from this point, you're basically identifying this as the bottom, right? So this is now the bottom. And you're basically identifying it as the low of low. And you're just going to wait for it to make a swing right back up, right? That's basically what you're looking for. So hopefully it makes more sense this way, why you're identifying lows for buys and then why you're identifying highs for sells. Because you're just identifying the highs and the lows, or the high point and the low point, so that you can catch that momentum back in the direction of the trade. Yeah, no problem, Rashida. All right, guys. So I think, I mean, that's all I can really think of for this specific strategy. As we continue on with, with our trading, we can figure out like other nuances and red flags to look out for. One of the nuances that Maddie mentioned would be the, obviously would be the pending momentum. Another thing might be like a big candle. If the candle is way too big, then you might want to avoid it. So I'm trying to find an example here, but I don't think I have one. Let me go back to. All right, so let me see if I can find any big candles here. I don't really see any here. Okay, so this is one example right here. I know this isn't an entry, but I just want to show you the reason why we want to skip these big candles. So you guys can see right here how this candle came up super heavy. Actually, this is not a good example because this is when volatility was pretty low. Okay, so like, let me measure this real quick. Okay. So this is the reason why you want to avoid candles that are too big. And with regard to big, I mean body. So see here how this body is so big. Typically, when you get a candle like this is about like, let's see, about 500 pips, right? 520 pips. When the candle is this big, you know that price typically has to retrace after, right? So like, for example, here you have a high low, and the candle's like 550 or 520 pips. Price may drop a little bit. So this could have been an entry for you to take, I guess, or no. Yeah, actually, yeah, this would be an entry take because there's a sell signal. And you'd enter right there for a quick TP. The thing that you want to be careful for here is that, I mean, this is probably not considered a huge candle. If it's like 1,000 pips, and okay, that's a huge candle. This is probably like a moderate candle, somewhat big, but not huge. But for the most part, for example, here, if you see something like this, it's due for retracement, right? Because it's pushed down too heavy. And that's what you get right here. Let me see if I can find a better example. Actually, there's another one right here. Let's see. So this candle right here, I mean, it's still not that big. I think you could probably find better ones during our live session, which were like, I know we had one during the live because I remember we saw an entry and we were just like, no, we're not going to take that trade because it was too, the candle was too big. I can't remember where it happened, but I know it was during the live session because I remember we saw one and I forgot who it was. It was either Maddie or Patrick. And he said he was probably not going to take it because it was against the trend. Plus the candle was just too big. I just can't remember where it was, but I know it was during somewhere in the live session. But if I see an example, I'll show you guys. But basically, whenever a candle is too big, and you can tell if it's too big because it's going to be bigger than all the other candles. So for example, right here, this is one that I would consider too big. This is like almost 600 pips. It's way too big. If your stop loss is 200 pips, you're going to get stopped out if it retraces, even like the slightest bit. But other than that, I think that's about it. If you focus on the red flags, don't trade where the red flags are, and avoid it if the candle's, well, I mean, either way, the candle would be too big because it's going to be one of the red flags here. So if you guys are familiar with the red flags, if the candle prior to entry is too large, you skip it, which would be the high-low candle. So, I mean, it's already covered here in the red flags. It's just really remembering that when you're looking for the entry. Other than that is probably just, I guess, pending momentum, if you want to add that to it. Pending momentum. So I guess that's like another thing that you can add on to there. Pending momentum, meaning that there's a momentum signal that comes up, but it disappears. You guys will see that every so often. Like the momentum signal will come up, it'll disappear before it closes, and then it'll just keep continuing on the next one. So you want to skip those types of candles because if you have that, you know, odds are like, for example, here, if we have a, I know we don't have an example of that here, but say, for example, we have this sell signal that didn't close here, right? You have a low here. If this doesn't close with the momentum signal, it's probably going to drop to the next one. And then it's going to just keep dropping lower and lower and lower until it actually closes. I can see right here that there was probably a sell signal that came up right here. I don't know for sure because, you know, we can't go back in time, but I'm pretty sure there was a possible pending momentum right here. And then as price continued to move along, it just kept dragging further and further and further until it finally closed right here. So I'm sure there was a sell signal here, disappeared, sell signal there, disappeared, sell signal there, disappeared, and then it finally closed right over here. So red flag for this specific strategy here. Other than that, I think that's about it for this high-low quick scalp strategy. If there's any other questions, feel free to put your questions under the chat. Otherwise, we will go over the variation and variation, the V1 variation and the V1 continuation. We'll go over a couple examples for that, and then we'll look up the SR rejection, and then we'll just wrap it up for the day. So if there's any questions, guys, this is your time to ask questions. So if there's anything else that you want me to cover, you know, feel free to put them in the chat. Otherwise, we will be moving on to the next portion of this mentoring session. So we covered the high-low quick scalp. Next, we're going to look at the V1 and V1 continuation. So let me see if I can find any of these examples here. Nothing here. I'm basically just going to look back at these high lows. So there's actually one right here. This is not one that I would take, but I'm just going to show you an example of a V1 entry. And I'll explain to you why I wouldn't take this trade. Although this does hit full TP, this is not one that I would personally take myself. So variation V1. You know, I need to create another one for this, for the continuation. I'm just going to copy this real quick. I'm just going to copy this, and I'm going to make another one for the continuation. It's confirm overall bias, it's fine. So I'll show you the difference between the variation continuation, the V1 continuation, and the variation. Just going to save this right here. All right. So the main difference between the V1 variation and the V1 continuation is that one, you're looking for a pending momentum, and the other, you're not looking for a pending momentum. You're looking to continue the trade in the direction of momentum. So slight difference. I mean, they're basically the same strategy, but they're just slightly different. So looking at this one right here, this is an actual normal variation. The reason why I wouldn't take this trade is because I knew the overall bias was bullish for the day. So we wouldn't have been taking this trade here. I'm just going to show you an example of a trade if it did meet the requirements and the bias was for a sell. So obviously this is not a trade that we take, but I'm just going to show you an example of a V1. So this is a normal V1 variation. We're looking for to confirm the overall bias. We're going to assume that it was bearish. I know that it was bullish today, but we're going to assume that it was bearish just for this example. So just say market was bearish. You want to confirm the high low. So you have the low here and the high right here. You want to confirm that the following candle is a double wick or double body. So right here we have a double body. Bodies are on the same level. Fourth, you want to confirm a pending momentum in the direction of the trade. So for example, right here we have a buy momentum. The next momentum has to be a sell because it goes from sell to buy. So buy to sell to buy to sell to buy, right? So we have the buy here. Next has to be a sell. With that said, that meets all the requirements right here. So you'd enter this for a sell, short position. Let the trade run. Actually, this one doesn't even hit because it goes on for so long. So this trade would technically still be running. So this is a reason why you wouldn't take the trade because we don't have a bias here for a sell. Also, you wouldn't take the trade because it came up so late. The market's actually closed right now, so it's technically still running if it was to be running, but it's not one that you would take. So that's a bad example. Sorry for that example there. It didn't, for one, it didn't meet the requirements, and for two, it was at the end of the session, so the market was to close. It was going to close anyways. Let's see if we can find an actual better example here. Nothing there. Okay, so here's actually a better example. My bad. That was my bad earlier. I thought I was going to actually hit TP, but it didn't. So here's the same example that I was showing you, just on a different candle. And for this actually fits both requirements. So first, you want to confirm the overall bias. Again, we're going to assume that it's bearish. I know that it's not bearish. We're just going to use it for this example here. For the second requirement, you want to confirm the high low. We have a low here, high at this point. Third requirement, you want to confirm a double body or double wick rejection. You can see that this one has both. It has a double body rejection and it also has a double wick. So this gives you basically a double confirmation that price is going to probably come down. With that said, you want to confirm your trading in the direction of pending momentum. You have a buy signal right here. Next signal has to be a sell. So you'd enter this trade right here for short at the close of the candle. You let the trade run, and there you go, full TP. So this is an example of a V1 variation. So that's a difference. You're looking for a pending momentum here. Let me find one where it is a continuation and not a normal variation. So let's keep going over here real quick. This candle here is too big, so this would not be an entry. Nothing there. All right, here's another example of a normal variation, but this is actually a good entry because this does fit the criteria. And by criteria, I mean the overall bias, because we knew that the bias is bullish from this morning. All right, so first you want to confirm the overall bias. If you guys remember from this morning, retail sentiment was like 55% long or something. So it was pretty neutral, but the fundamentals were up like 600 points. So fundamentals were up 600 points, 4 hour, 1 hour, 30-minute, 15-minute, and 10-minute were all bullish. I mean, this isn't going to help because this is a short-term trend, but the overall bias was bullish for this morning. So with that said, this requirement would actually be met, the overall bias. For the second requirement, you want to confirm the high lows. So right here we have the high, and this is the low. Since we're looking for a buy here, we only care about the lows. We don't really care about the highs. Third requirement, you want to confirm that the candle following the high low is a double wick or double body. So for example, right here, This is not a double wick or double body, right? So this is irrelevant. It doesn't even fit the requirement. So that's why we're ignoring it. And we're moving on to this one over here, which actually is a double body. If you guys need help checking that, just open up a horizontal ray, use the magnet tool, click on the bottom of the body right here. And if it aligns like it does right here, you can see it's on the same exact line, like literally flush, right? There's no gap, there's no space. It's right on point. If you have trouble identifying that, just use that tool there. And that tool will help you confirm that it's for sure a double body. So with that said, we have the requirements met here. You enter a long position at the close of this candle right there. TP stop loss 1030. You let the trade run. Kind of retraces back a little bit, shoots right back up, and full TP on that following candle. So this is an example of a V1 variation. If there's any questions, guys, feel free to put your questions in the chat. Question from Rashida. Rashida is asking, so we don't need trend meter on the V1, right? So you technically don't need it. I mean, you're going to use it to confirm the overall bias. So for example, here, you see how this right here is bearish, but from the live session today, you remember that the 4 hour, 1 hour, 30 minute, 15 minute, and 10 minute were all bullish, right? So this 1 minute doesn't really matter too much. You don't care about what's going on the short time frame. You care what's going on the higher time frame, because you want to make sure that your trade is going to push up eventually. So right here, you can see it's bearish, but it doesn't really matter because eventually price will push up and it will shift. So it does push up a little bit or bounce around, but eventually it does correct back up to, you know, the bullish trend. So yeah, the trend meter is not necessary, but it would be helpful to identify, you know, what the bias is, as long as like it aligns with your long-term bias. So there's an example of a V1. Let me see if I can find a V1 continuation. Surprised we don't see any here because they come up pretty often. I just haven't seen them today or anytime recently. I'm just pretty much looking at all of these high lows and confirming whether actually there's one right here, or let me see real quick. If this here meets the criteria. Actually, this does meet the criteria. It's like super close, but it does meet criteria. So I'll go ahead and use this as the example. This is going to be the V1 continuation. So it's basically the same thing. The only difference here is that you're not looking for a pending momentum. You're confirming that. Actually, this is a better example right here. This is a cleaner example. Or I'll show you both. So again, right here, we have two entries. We have one right here, double body, and then we have one right here. So I'll show you this one first. You want to confirm the overall bias. We knew that was bullish from this morning. Confirm the high low. There's a low here. It's a double body rejection. You enter a buy right here. Main difference again, guys, is that you're not looking for a pending momentum, right? For the regular variation, you're looking for a pending momentum, meaning you're looking for a sell signal and you're looking for it to swing back up. For this one right here, you're just going to continue the direction. Price is already pushing up. So like basically price pushed up, retraced. You have a double body there. This is a reversal pattern. So price comes up, comes back down, reversal right here, and it shoots right back up, right? Same thing right here. Price pushes up, comes back down. You have a double body. This is a reversal pattern. So you're identifying this as a continuation back up. Because price retraced down a little bit. Now it's reversing right back to the upside. With that said, you'd enter the trade at this point, let the trade run. Retraces a little bit, but eventually it does push up and hit its full TP right there. So there's one example right there. And then there's one more example right here. So basically back-to-back continuations. So let me go back to this one right here. Same setup. So this is a situation where the trend meter would be helpful to you, Rashida. Can you see that, how that plays out? So down here, you can see that the overall bias was bullish and the trend meter here is also bullish. So if you see that happen, odds of this trade hitting are very likely. So, you know, you can use that as an extra confluence. It's not a requirement, but it will help you pick and choose the better trades over the riskier trades. So back to the requirements here, confirm the overall bias. It was bullish, confirm the high low. There's a low right here. Confirm the candle following the high low. And this means it could be either on the left or the right of it. That it is a double body or double wick. So with that said, there's a double body right there. Fits a criteria, reversal pattern. So momentum up, retracement, reversal pattern, and we're expecting it to push right back up. You let the trade run, full TP on the next candle right there. So super simple. The main difference is just one's a pending momentum. The other is you're continuing the direction of the momentum. So, all right, that's it for the continuation strategy. If there's any other questions regarding that, feel free to put in the chat. Otherwise, we're going to move on to the SR rejection. So let me put the strategies here again. So when to apply each strategy. So for one, the high-low, quick scalp, directional market. Two, variation, V1, and V1 continuation, directional market, right? So typically you're going to be looking for just market conditions, right? When you mark up the high lows, you can pretty much tell if price is ranging or moving directional. Lastly, for the SR rejection scalp, ranging market. So this is all you really need because these are the main ways that the market moves, right? So for example, your price is going sideways. What are you going to apply during this period? Rejection scalp, right? Or SR rejection scalp. Price is moving directional to the upside. What are you going to apply here? You're going to apply the high-low quick scalp, or you'll apply the variation V1. So I could already identify here, price is moving directional, right? So if I was just to point out how many entries you get here, you have one right here, it's a V1. So there's a V1 there, a V1 continuation, and it's also a high-low quick scalp. So you basically have 2 or 3 strategies in one. Odds of this hitting are close to 100%, which it does hit right there. Right, you look for another low right here. You have a double body, you have a low right there at that point. It's the same thing. This is a high-low quick scalp and a variation or a V1 continuation. So there's 2 strategies right there on the same candle. Odds of it hitting, very likely. And you can see here that it hits straight to TP, no drawdown. Price is moving sideways right here. See if there's any zones here. So there's a zone right here, but I don't see any entries. Okay, so here's one right here, right? So you can see how price is moving sideways right here. There is an SR rejection right here, right? Wick rejection off the structure. Which is right there. You take that for a long position right here and full TP, obviously. So is it making sense, guys? Like, you know, literally all you need is these 3 strategies. If you know these 3 strategies, you can take trades in markets moving directional. You can take trades in markets moving sideways. It doesn't matter because those are the 2 main market structures, right? When price is going sideways and when price is going directional. So, I mean, realistically, this is all you have to master. So what I'm going to do next, you know, in the next couple of weeks is I'm going to recreate the course. So the course has a bunch of strategies, and I know there's a lot of confusion because people don't know what to focus on. This is really what you need to focus on. If you can do this, you can cash at least 1 or 2 trades a day, lock in a couple $1,000 per account, and stack up, right? If you guys have seen the my profits for like the past couple of weeks, they've been straight wins, right? If you guys have seen, you know, everything over here, like, so for example, today, right? Lots of wins right there because I know exactly what strategies to apply during what conditions. You know, last week, what did I lock in last week? Some profit right there. Every day has been pretty solid for me because I've kind of like cracked the code as to like what strategies to apply during what conditions. And it's really easy to figure out how the market's moving because all you have to do is mark up the high lows, right? Like for example here. So like, for example, I could just open up a random date, right? So for example, right here at 10 a.m., if I open this up right here, if you can't see market structure here, all you have to do is, so if you're confused about what the market is doing, right? All you need to do at any time of the day is turn on your high-low indicator, K2 high-low, and draw your high lows. It's super simple. Like it takes a few seconds to just identify your high lows right here. Once you identify your high lows, it literally tells you what the market's doing. So when I revamp the course, this is what I'm going to focus on because I don't want people to get confused with like what to apply. Because it's super simple. So for example, here, if you're confused and you're like, man, what the heck is the market doing, right? Now, if you look at it with the high lows here, now what is the market doing, right? What can you tell? Market is going sideways, right? So when market is going sideways, what strategy you're going to apply? You're going to apply the SR rejection. So you turn on the SR V2s. You got the trend meter down here. Trend meter is red. You're looking for, possible entries here, or there's momentum in it. All right, so we have, the trend meter is kind of wacky all day today because the market was kind of moving kind of funky, but okay, so I think there is an entry right here, right? So if you scroll back and you kind of see where price is moving, you can see that market was moving sideways. And let me just show you an example of an entry here. So if you can identify that, I know the market's, I know it's kind of messy here, but just using this for an example, you identify that market is going sideways. We have an SR zone right here. What I'm going to do now is I'm going to clean this up, just turn that off. And you can see that we have an SR rejection right here, right? The reason why you know to apply this strategy is because you've already identified market structure. So you see that market's going sideways. You're looking for the SR rejection entry. Here's an example of the SR strategy. So SR rejection right here. So the reason why we're looking for a buy here, and here's the shortcut for it, right? If you're looking for a buy, you just want to make sure the trend meter is green. This is the main thing you'll look for if you're looking for an SR entry. You just look down at the trend meter. If the trend meter is green, you're looking for buys. If the trend meter is red, you're looking for sells. If the trend meter is blue, you don't look for anything at all. So, I can show you multiple entries right here too. There's another one right here, but I'll just show you this one for now. Trend meter is green, so you're looking for a buy. You look over here to the requirements, identify bottom wick rejection of K2SR V2 zone with a moderate green candle. This right here is moderate because if you measure the wick on top, the wick on top is about 60 pips. The body of the candle is bigger than that. It's almost double. It's 110 pips. So with that said, you're going to go ahead and look at the other requirements. You identify the bottom wick rejection right there off the structure. You confirm you're trading in the direction of trend using the K2 trend meter. Down here it's green, so you're obviously looking for buys. Third, you want to confirm that you're trading in the direction of momentum. You can see, look back to the most recent momentum signal. It's a green buy signal. So this is going to confirm that you're looking for a buy. And then lastly, you can enter on the open of the following candle. So for example, right here, you enter a long position. TP stop loss is 1030. Let the trade run. Full TP on the next candle, no drawdown. So is that making sense, guys? Like, really, it's not that difficult. You have like a few strategies here to follow. The real thing is just to identify when it's moving directional or when it's moving sideways. If it's moving sideways, look for SR rejection scalps. If the market's moving directional, you have two different strategies here to apply. And these pretty much are the same thing. It's just the difference with the high-low quick scalp is that you're not really looking for the candle to close, right? You're just looking for a continuation. So these strategies are very similar, these two right here. And this one just pretty much works throughout whatever conditions that come up. They don't come up as often, but when they do come up, they typically do hit, and they hit pretty hard. So, yeah, other than that, I guess I could show you guys another example of an SR rejection. But let's see, question from Maddie. Maddie's asking, How big does the wick need to be for the high-low quick scalp? There's no requirement for that, Maddie. If you see a wick, that's the entry. So looking over here at the requirements. So as soon as you see the wick, you got to make the entry, man. You can't think about it. So you can't think about whether the wick's too big. You can't think about whether the candle's too big or anything like that. You just got to enter right away. As soon as you see the entry, as long as there's no pending momentum, because that's what you mentioned before today, that's the only time you'd probably think about it, right? Other than that, you don't have time to think about it. As soon as you see the wick, like so, for example, right here. Here's another example. I know this was a SR rejection, but there's another entry here actually for the high-low quick scalp. So we have a low over here, buy momentum. As soon as you see the wick right there, Maddie, like you see how like the wick came up. Now, let me just go back one candle. Yeah, Maddie said, because I've been looking at it, it's been fire, bro. I've just been taking them as soon as I see the small wick. Exactly, Maddie. So you just got to think about the wick, bro. So as soon as you see the wick over here, see how the low's at that point. I'm gonna hit this candle here and then just look at the next candle and see how it moves. See how it initially is red. And then as soon as you see the wick there, which is like literally, I mean, you could have entered down here, so you don't have to enter right here. If price pushed down and then you saw the little wick down here, you would have just entered right away and you had perfect entry. At that point, price would have pushed up higher and blasted right through your TP. Yeah, exactly. Maddie said it right. I would have entered down there. Yeah, exactly. So this is why it's important that you guys are focusing when taking these trades, because you don't have time to think. As soon as you see the wick, you got to enter right away. I mean, if you enter kind of late up here, it's fine. You probably still hit your TP, but you want to get in at best entry as possible. I mean, sometimes you'll get in and price will keep dropping. Like say, for example, price came down a little bit and then it came back up, and then maybe you get like some crappy entry right there, right in the middle. It's fine. Or if you wait longer and you see a wick down here, then even better. But either way, you want to get your entry somewhere within this area down here, right? So your entry has to come up somewhere around here. If you enter up here, you're too late. At that point, it's like just skip the trade. Sorry guys, I respond to a call right now. But yeah, so just like what I just covered with Maddie, you don't have to wait for anything because this is your optimal entry. Optimal entry is going to be between this area right here. This is where you want to get in, because if you get in at this point right here, you'll be covering your spread. So if your spread's 190 and you have this gap of 20 pips, this is going to cover your spread. So as soon as price pushes up, you're already in profit. If you enter up here, then I mean, you're not totally screwed, but you enter at this point, your entry is actually going to come in from right here because you got to cover the spread first. So hopefully that makes sense to you guys. But yeah, no, it's super simple. Maddie said he's been applying them pretty much all day. It's been fire, which I agree, man. I've been like, I typically don't trade during Asia session, but I've been seeing them come up, and I've started to notice that around 8 p.m. Pacific time, around I guess like 8 to 10, around that time, the spread will drop a bit. So the spread will go from like 320 to like 240. And if you find some entries around that time, it's perfect because you'll have perfect volatility to, enter and get out. Yeah, no, definitely. And Tasha said she loves the strategy. I do too. I'm surprised I didn't think about this before. I was applying the strategy before, but it wasn't the same way. It was slightly different. The way that I would apply the strategy was so for example right here, so see how we have a high, and don't apply this strategy, guys. I'm just trying to explain like where my thought process came from, because this is the way that I used to apply it before. When price, and you guys have probably seen this before, because this goes hand in hand with the liquidity push, right? So if you guys remember the liquidity push strategy that I used to apply before, basically my entry would be very similar to this, but instead of going for the lows, I would go for the highs. So it's probably going to start making sense here, guys, like how I would apply the strategy, right? If you guys remember before, what I would do is if I knew momentum was going up and it was very strong, so for example, we have a buy signal here, what I would do is I'd have a buy stop right here, right? You guys remember that? The problem with this strategy is that you're entering way too late. You gave away all this time to enter. So I could have entered way down here right? But what I did was I was entering up here and I get screwed because the spread's so wide and I'm literally giving away all this movement right here. So what I did is I just basically made my strategy better. This was considered liquidity pushes, right? We had liquidity marked up here. And what I would do is I would enter as soon as price hit that point. The problem with this here is that if you enter at that point, you already gave away like how much you gave away, like literally your full TP already. You could enter this trade and you'd be giving away 50 pips or 60 pips. I mean, yeah, eventually it would hit because it's the same thing as a liquidity push, but you're getting in at a better entry point. So instead of getting in the middle, you're getting in at the very bottom and you're writing that up. So it's literally it's a continuation. It's the liquidity push on steroids, basically. You're taking a liquidity push, but you're getting in at a very, very better entry time, which is like way down here compared to entering up here. Let's see. CT said I've been looking at taking entry at body, top of high-low candle and buys on body on bottom of cells. Yeah, no, that's pretty solid too, CT, because the thing with that you're mentioning is that again, you're taking a step forward, right? So for example, here, CT said like he's taking them at the top of high-low candle for buys and body bottom on cells. Yeah, so basically the way that CT would apply or take the strategy is basically the same way that I would. So this is like the latest time that you could enter the trade, right? So the flaw with this entry here with applying it the way that you're doing it, CT, is that sometimes you might be entering and price might just continue to drop a little lower. Let me see if I can find an example here. I don't think there's any good examples over here, but I get what you're saying, CT. That's basically like the last area for you to make the entry point, right? So for example, right here, you'd enter it for a sell, you'd enter at the high of the body, which would be right here, which would be where the candle would end the wick, right? Because the thing is when the candle opens right here, price drops below, but the wick could show up down here, down here, down here, but this would be the last area to make the entry. So you're actually entering at like ideal entry point. But if you want to get down a little lower down here, like what Maddie's doing and what I'm doing, you just you'll get in a little earlier, right? So, but I get what you're saying. And then for example, for a sell, you'd be looking for. Let's see if I could find one over here. So there's no wick on this candle, but if there was a wick, this would be a prime example of like what you were looking or what you've been applying. Look for another cell here. Okay, so here's an example actually. So you said you're looking at taking entry at body top, buys, liquid sell, bottom lows. Yeah, so again, right here, same thing that CT was mentioning. And you can correct me if I'm wrong, CT, but yeah, so yeah, CT said exactly that. So this is where CT would make his entry point, which makes sense. So here's the thing, if you guys are not able to enter on time, which is completely fine, it's the market moves so fast, if you're not paying attention, you're going to miss the trade. But here's an example of like how CT is making his entry. So what he would do is, what I would do personally if I was entering this type of trade, I would probably wait for the candle to close and I just have like a sell stop right here, right? So when price does come back down, like it does right here, it just automatically enters the trade and goes straight to your TP. The difference between this is you would enter at this point down here. If I was entering the trade, I'd be entering from up here. So give me a little more leeway, right? But it doesn't really make a difference. I mean, you're getting a little bit of leeway here, which is like, I mean, how many pips is that? It's not very much. It's, let me just measure it. You're getting like a 40 pip advantage, which is good enough because it'll cover the spread, right? But it's not going to be a game changer. It's not going to make or break your trade. The only risk that I see with this type of entry CT is if the candle is too big. So for example, see how this high low right here is huge candle. If you enter down here, not that this would be an entry, but if you would enter down here, it'd be like entering super late. That's the only time I find the risk with taking these types of trades at those bodies. That's not an entry there, but if it was, that's where it'd be a little risky. It's just whenever the candle's too big. So for example, no, not this one here. So again, right here, here's another example what CT would enter. He would enter right there at the low of the candle, which would be fine. It still hits TP eventually. But here's where the risk comes into play. You guys can see that there's only so much space right here to cover the spread, right? It's enough to cover the spread, but it's definitely a little risky because you can see our price pushes up right here, and then it could possibly hit your stop loss before it comes back down. So this is where CT would make his entry. I would make my entry a little higher, like right there, as soon as I saw the wick. And this would give me a little more leeway here, maybe another 20 pips. So this price would have bounced around this area. It'd give me like about 50 pip leeway for me to cover my spread. So this would cover a 500 FTMO spread, because a 500 would be equal to 50, which, that's enough to cover whatever broker that you're using. CT said these also seem to work better in sideways, lower volatility mid-morning. Yeah, no, and I agree too, CT. So that's why like sometimes I'll apply this like around 11 or 10 to 11. And then a lot of times pre-market, the sweet spots that I found entries for. So here's trading time sweet spots. Pre-market, I've seen a lot of entries come up around this time. I don't know if it's just like for now or if it's going to continue to be this way, but pre-market 5 a.m. to 6 a.m. Pacific. New York session, of course, 6:30 a.m. to 8 a.m. 10 a.m. to I guess 12 p.m. And then Asia session, which I don't typically recommend you guys trade during Asia, but this is a time that I typically look for trades. So if I'm trading, these are typically the times where I'm looking. Pre-market 5:30 to 6 or 5 to 6. This is usually the time I'll wake up. I'll wake up at 5. I'll come straight to the computer. If I see anything at 5, I'll just take it and I'll go to the gym in the morning where I'll go run or something. Come back around 6, have like light breakfast, and I come on the live with you guys at 6:30. So this is like the sweet spots where I trade. Basically, these are the times where I see the spread to be very low and the volatility to be pretty high, like high enough to where you can take the trades, not super high, but high enough for you to like hit your TPs with like little to no drawdown. So those are my trading sweet spots. And other than that, I think that might be about it, guys. We covered pretty much the main strategies that we're applying during the live session. As I mentioned before, this is going to be our main focus moving forward. I just want to make it as simple as possible for everyone, right? Because I see so many people applying different strategies, and then people get confused and they mix up things, and they're just all over the place. So I know we have 3 variations. You guys can apply whatever strategies you guys like, but I'm going to focus on just the V1 continuation, SR rejection for sideways markets, and then this high-low quick scalp as we continue to work on it. But yeah, when I revamp the course, I'm going to set up a masterclass. I'm going to start doing these things where, because we get a lot of brand new traders who want to learn how to trade, I'm going to set up a masterclass where it's like basically the fundamentals, like the only stuff that you really need to know to trade the way that we're trading. That's going to be something that I'll be developing over the next couple months. And it'll be like a 3-day like boot camp, basically, like a 3-day where we'll be live, where maybe we'll even do it in person. 3-day course where I'll basically go over everything, like, what are pips, how to use all the functions on TradingView, what do you need to know, what indicators do you need, stuff like that. Once I have that set up, if you guys are already a member, it's fine, you guys will have access to it. But I'm also going to be changing the structure for people signing up to Kodi Kai trades. The reason why I'm changing it is because the monthly, I feel like the monthly isn't enough for someone to really grasp the concepts that we're applying here. I'll see a lot of people sign up for a month and then they do well for the first couple of weeks and then they blow their account and then they just stop. And then they come back like a month later. That's not going to be good because you need the consistency. So what I'm going to be doing is I'm going to be getting rid of the monthly and I'm only going to be providing the masterclass. So masterclass is not going to be cheap. Obviously, it's going to be bundled with a year subscription because with trading, you have to be consistent for at least a year, guys. You can't be trading for like a couple of weeks and expect to be a pro trader, right? I feel like a lot of people join trading and they think that they're going to be great over the next couple of days or the next couple of weeks or months. And then once they hit a tough spot, they just give up. And, that's how the story goes typically. If you guys have access to, the indicators and strategies for a year long, this is going to force you to continue practicing. Even if you blow your account, continue to practice with a demo account for at least a year until you really understand it. So, over the time, things are going to change. There's going to be updates. If you guys are monthly members right now, it's completely fine. You guys are going to be okay. But the moving forward, if you decide to take a break or cancel, we're not going to be renewing any subscriptions because that whole option is going to be removed. So just, something to keep in mind. If you guys want to stay on the monthly, make sure that you don't cancel and you don't fail to make payment because the system will automatically remove you. And once it removes you, we're not going to be able to renew it. So I just want to give you guys a heads up now because I don't want people to be asking for that in the future when, everything changes. But I think other than that, guys, if you guys have any other questions, feel free to put your questions in the chat. I know a lot of you guys have been asking about the whole funding company thing. Once I get this whole masterclass down where I can focus on you guys just focusing on these 3 strategies, then I'll be more comfortable with you guys trading my capital because the last thing I want to do is let you guys kind of do whatever you do and then have you guys make mistakes. If I could drill down these 3 strategies that you guys can learn, I think you guys will be very profitable and it'll make me profitable as well because I don't have to trade as much, right? I'll just pretty much let you guys trade and then, we'll split the profits. So other than that, I think that's about it, guys. If you guys have any questions, feel free to reach out. We've been on this mentoring session for about an hour and a half, so I think it's more than enough time unless you guys have anything else to cover. But yeah, every week we'll be doing this. We'll be drilling down on these 3 strategies, mastering them, covering any inconsistencies that we need to cover. But other than that, I think that's about it. We pretty much just have, I feel like we pretty much cracked the code of like what we need to focus on. The other strategies still work perfectly fine, but we're going to be focusing on variation, continuation, SR rejection, and this high-low quick scalp. So, all right, guys, I think that's it for now. If you guys have any questions, feel free to message me on Telegram or email me. Other than that, I think that's about it. So all right, guys, I will see you guys here tomorrow morning, same time, same place for our live session. But other than that, let's keep going. We've got the second day of the week coming for this trading week. Just keep in mind tomorrow, the volatility is going to be pretty high because we do have earnings coming out pre-market and then we have some earnings post-market as well. So, all right, guys, I will see you guys tomorrow morning. If you guys have any questions, feel free to reach out. Otherwise,